Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Another week and another highly anticipated money making opportunity. That's one of the most lucrative trends in the current financial climate that we find ourselves in right now. That famous saying, blink or you'll miss it, really never has been more applicable than it is right now. In today's highly macro driven markets, they are fueling one of the greatest wealth transfers that we have ever seen, which is presenting savvy traders with back-to-back opportunities on a daily basis. This is not a buy and hold market. During these exciting and fast-moving markets, it creates the most optimized environment for trading. So far this year, we have seen commodities, they have notched up explosive double-digit gains to the upside and the downside in a single week, not once, not twice, but on multiple occasions. For traders, making money in these markets is very straightforward. The week-to-week short-term macro-driven trend that we're seeing right now can literally be summarized as buy low, sell high, rinse, repeat, and do that all over again. Take the last week, for example. We saw huge explosive moves to the upside and the downside on every possible commodity imaginable, from the metals to the energies to agriculture, following the release of the US consumer price inflation and producer price inflation data. That provided traders with an incredible flow of opportunities to capitalize on both the macro-driven rallies and the pullbacks to bank gains of up to 10% or higher, literally in a matter of days. Crude oil, we saw it break all the way back down to $72 the previous week, and then within 1 week, we were back at the swing highs, trading back above $80 per barrel. Very similar happened the previous week as well, following Fed Chair Jerome Powell's speech at the Economic Club of Washington. And you guessed it, the week before that, following the conclusion of the Fed's monetary policy meeting and the blockbuster US jobs report, we had gold breaking out to 10-month highs. After the US jobs data report, within 2 days, gold prices, they dropped 1,000 points to the downside. We saw a drop from 1960 all the way down to 1860, which yet again provides massive opportunities to capitalize on the volatility, but comes back to the point, it is not buy and hold. You want to be banking into strength and then rinse and repeat, snipering in at the lows. Right now, in these fast-moving markets, they are presenting savvy traders with that endless flow of short-term macro-driven opportunities to generate gains of up to 10% or higher in a single week, sometimes in a single day. And in today's inflation-adjusted terms, your money sat in the bank that will not even make that level of return in the next year, let alone in the next 3 or 5 years from now. Whichever way you look at it, there's really nothing historical you can point to for what is going on in the markets today. The current macroeconomic backdrop, that is fueling one of the greatest wealth transfers, unleashing opportunity upon opportunity for trading. The great news is that the trend is here to stay and set to continue throughout the rest of 2023. These are the times that traders, they wait decades for, because it's times like these that make millionaires and billionaires out of regular people. It's not just regular people that are making fortunes in today's financial markets. According to Bloomberg, commodity traders, they have become one of the most sought after professionals within the banks, within the hedge funds, being offered multi-million dollar packages as the industry is scooping up the best talent. This is something we haven't seen since the global financial crisis, and that really sums up the mood in the markets right now, where the world's most powerful financial institutions, they currently see the biggest opportunities in commodities. Last week, there were 14 US economic data releases. 12 of them came in above expectations. This is now beginning to emerge as a trend we're starting to see since the turn of the year. So much so that Citigroup's Economic Surprise Index, that's leapt into positive territory. This completely contradicts the Fed's new dovish narrative that the disinflationary cycle has begun. But to give the Fed some credit, getting inflation down from 9% to 6% shows the easy battle against price pressures has been won. But getting inflation from its current level down to the Fed's 2% target, that will likely prove to be their hardest and most challenging yet, which ultimately means stubbornly sticky inflation. That will be one of the major themes dominating and driving the financial markets throughout 2023. Extraordinary times, they do create extraordinary opportunities. Right now, these markets, they are for trading. Focus on the short-term macro-driven opportunities, stay nimble, and routinely take your profits off the table. If you want to thrive and not just survive in these highly macro-driven markets, then you need to trade like the hedge funds, the banks, utilizing a professional, research-driven approach. If you want to supercharge your trading and make 2023 your best year yet, then go to www.jointhegoldandsilverclub.com now to learn how our mentorship program can help take your trading to the next level. Now, looking ahead, it's another big week for the markets that will once again put the Fed's new disinflationary narrative to the test, filled with a magnitude of high-impact events that traders will not want to miss out on, which includes US fourth quarter GDP, the Fed's preferred measure of inflation, PCE inflation data, as well as the hotly awaited ISM manufacturing PMI report. And just in case that wasn't enough to keep traders busy, also on the radar will be the release of the FOMC monetary policy meeting minutes, all topped off with speeches from a host of Fed officials, which always has the potential to move the market significantly. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into next week. So firstly, into Friday's close, we've seen an impulse move higher here for gold, for silver, for copper, for platinum, and also palladium, all catching a bid there on Friday as the dollar essentially tanked into the close, closing limit down on the day, which is interesting because now as we go into next week, on Monday, we have a public holiday in the USA, and what we tended to observe over 2022 is that often during public holidays, you can get more exaggerated moves in the market with less liquidity, and oftentimes you can actually see a risk-on move for commodities. So now I'm very interested to see going into next week whether this move is going to follow through and if gold here is going to be able to get some clearance back above 1,850 US dollars per ounce as we go into next week. So first of all, gold of course managed to find support from the levels that it broke out from right at the end of December and into the first trading week of January. So it came back down, retested 1,818 US dollars per ounce, and this of course is where we got the bid on Friday, and then into the close there we've had a decent move off the lows, so over a 235 point move off the lows there, up 0.4% on the day. Now it's been more impressive here with silver, up almost 1% on the day. Again, we've come all the way back down, retested the breakout levels this time around from the beginning of December for silver, and as a result we've started to see the potential for some follow through here if we were to get a break back above $22 per ounce as we go into next week. Now, as I mentioned to you last week, platinum and palladium in particular, I like this whilst it's under 1,500 US dollars per ounce. We talked you through it last week on both of the reports. We had an impulse move lower down to 1,415 US dollars per ounce on Wednesday. Subsequently, from lows to highs, we've seen over 1,000 point move higher here, and now you can see into Friday's close, very much like the other metals here, palladium is starting to get a bid. We've had 3 taps back down to liquidity at the 1415 to 1450 zone, and now I'm interested going into next week whether palladium is going to start making a move off these lower end of the channels here, and whether palladium is able to then sustain a breakout and a move back above 1,500 US dollars per ounce. Again, I do like palladium sub $1,500 per ounce. Platinum is very interesting here. The platinum to gold ratio has broken down to 0.5. So basically we now have platinum prices which are trading half the price of gold. Historically, whenever we've seen this happen, platinum has then gone on to outperform gold. So if we do start to see a recovery here for the metals going into next week, they still have some key levels they need to break above, but if we do see that start to accelerate higher, platinum may well start to outperform gold once these metals gain some traction. So at the moment, again, very much like palladium, we've had 3 taps back down towards these areas of liquidity, just above $900 per ounce here for platinum, which is holding at the moment. What we want to observe going into next week is whether we're going to get some clearance back above $940 per ounce. If you break above that zone, this is where you've then got the potential to start to get a rotation higher between now and the end of the month, and as we start the month of March as well. We've still got some work to do to the upside here for platinum in order to do that, but absolutely I would have that on the radar. As I mentioned last week on gold as well, if gold manages to get a break and a close here back above the 1850 handle, then you could start to see some pressure to the upside. You've actually got a price structure here, falling wedge, which could then start to catch some momentum if you do get that usual risk on move on the public holiday on Monday here in the USA. Then we may start to get some traction above those levels. Just be mindful though, oftentimes after the public holiday, which we have on Monday, where you can get some risk on, the following day on the Tuesday, you can often see pullbacks. So this just comes back to the point that if you are managing to sniper in at some of the lower levels here, you likely want to be in and out and banking at least some profits on the strength that we may get on Monday. If we do see further follow through to the upside on Monday, through to the beginning of Tuesday, if you get an impulse move higher, then you may wish to look at the potential for banking some fast profits, because later on in the week, especially on the minutes of the FOMC and other data releases that we have coming out, you may well see choppy price action yet again, which is the name of the game right now. We just take it back to crude oil. So as you mentioned at the beginning of the week, over 3 trades, we booked 2,000 points profit on this market, banking into strength at $80.50 over multiple positions here on oil that we'd accumulated down at 73, 74 US dollars per barrel. And of course, once we hit that level again, the 80 level, we have seen a reversal back down towards the swing lows. And then once we hit that level at the beginning of last week, ahead of the CPI data, we've had that normal profit take in the outflows later on in the week. Again, with crude oil, I would be very interested if we were to come back down to those key zones again, so 72, 71, $70 per barrel, the levels that we tested at the beginning of November. If we were to roll over, come back down towards the lower end of the range, very simply, these would be levels and areas of interest for us on the energies as we go into next week. So I would definitely have crude oil on the radar going into next week if we were to rotate back down towards those levels. Also, copper price action into the close here on Friday, building a nice solid base. And I would actually keep a close eye on copper here, because copper may well start to lead the other metals. We had a 2.8% move higher over Thursday and Friday. You can see here where we're starting to build a nice base, in fact, here on copper. Strong close there on Friday. I would imagine as well, very similar to the other metals, the price structures that are starting to play out. If you do see copper do this, you've then got the potential to break out from this bull flag, and then you can start making a move back towards the swing highs here as well for copper. So I definitely have that on the radar going into next week if we do see follow through, because that is likely where you would then see a similar follow through move on palladium as well. You could then start to get palladium get a pump to the upside too if you see that follow through. And also, as I mentioned before, you may well see that additional impulse move at the beginning of the week for gold. And I also would keep a lookout for that potentially on platinum and also silver too, which had a strong move into the close. So again, just comes back to our point that at the moment it is absolutely a trader's market right now. It is not buy and hold, and this is where you want to be just capitalizing on the day-to-day and week-to-week volatility with commodities. And whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income or a second or replacement income, or just to earn a better return on your savings, then now is the time to take action to give yourself that gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, you need to adopt your strategy to the current market conditions. Most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success is not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There is a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that don't work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you want to be utilizing a professional research-driven approach, or you just end up wasting lots of time, money, and effort, and you have no results to show for all of your hard work. In these rapidly changing markets, you need to constantly be innovating and evolving. Technical analysis and outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already massively stacked up against you. If you want to change your results, then you definitely have to change your thinking. If you want to learn our exclusive research-driven trading approach that's never taught to retail traders, only reserved for those professional traders in the banks, the hedge funds, with access to powerful game-changing insights, including where the banks, hedge funds, institutions are buying and selling, the key liquidity zones so you can enter and exit the markets, utilizing the fundamentals, the macroeconomics, the capital flows, alongside the daily, the weekly, the monthly, the quarterly data-driven cycles, and the intermarket correlations, then you need to join our mentorship program. As we head into the new year, we are in one of the greatest eras of wealth creation the world has ever seen. If you want to capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, then there is no better time than now. If you want to upgrade your income, you have to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will, of course, get in touch with you ASAP.